Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook with Brad Kooima, Varilek, mixed trading, grain and livestock futures. We've got cattle and soybeans up this morning. The rest of the board's mostly lower. And of course, Brad, we've had days where we've had some nice recovery in the cattle market after the big correction. And everybody is asking, are we getting close? Is the bottom in? Do we have all the negative or bearish news worked in?
Fantastic question. Thanks for having me on, Michelle. Very difficult for me, or I think anybody else, to give a very definitive answer on that. To me, there's there's still enough uncertainty out there, and everybody's heard me say this 100 times, that uncertainty is bearish. So I wonder when, from all indications, it sounds to us like rolling back the Brazil tariff is all but a done deal. It's just a matter of having the publicity shot now of the two presidents, right? Taking a picture of them signing the deal. So, that I would think, especially to a headline reading algorithm, would have a bit of a negative effect on the market. So we think that's out there. But of course, the real gorilla in the closet is the Mexican border.
Right.
And they're talking again today, a delegation from the U.S. down in Mexico today. Now, from the people that I talk to, I'm not sure I share this belief, but everybody else seems to be thinking, it's not going to happen for a long time. It'll be later rather than sooner. I don't know, in my own mind, I'm going like there's two products, Dectomax and Ivermectin, that's been approved to treat it. Cold weather is coming, which is another deterrent. I don't know. It seems to me like I don't think we're that far off like some people do, but we'll see once. So that's all out there. I miss the days where you and I were talking about average weights, beef demand, what the show lists are, and what we think cash was
going to be. Actually important, right?
Yeah. I think there's a story on the cash, though. Maybe we could try to visit that if you want.
Yeah, let's talk about cash, because we didn't really have a good test in the North last week. We saw improvement in Fed cash trade as we went through the week last week. And so do you think we could even see higher cash again this week?
Well, it's starting to feel like that to me. I don't like to do interviews on hearsay, but I'm pretty good source. I think that there was some 237 that traded in Texas on Saturday, which is a little unusual. Saturday, obviously. Those don't get reported for a while. The North, there was some panic. I call it. I was one of them. We sold some cattle Monday, a week ago today, at 2:30, when it felt like the market was coming apart, and then we all kind of locked up the rest of our inventory as the futures market started to improve. So there's very, very little trade the rest of the week in the North. In fact, Northeast Nebraska barely quotes a trade. There was a little bit of 232 in Central Nebraska. Otherwise, 236 a little bit in Kansas. So generally a little better, but not a lot traded. So one, you've got a packer that has to have used up a lot of his inventory that he had bought, and now he's closer to the knife, and there's going to be more urgency. And you got a feedlot that maybe has a little bigger show list. Show lists up here a little bit bigger. I wouldn't call them burdensome, but a little bigger than they have been the last couple of weeks. And some of these cattle are typical this time of year, long-fed calves, farmer-fed calves, a little bigger than average maybe. So I'm going to guess that the feedlot wins the battle. I'm going to guess that we get a little higher cash here. I think asking prices around 235 in this area, and we'll see if we can get that far. I think there's a chance.
Cash feeders, have they seen any improvement, or are we still seeing depressed prices there?
Whatever I say here is probably going to get an argument from somebody that was at a particular sale barn somewhere that thinks that they were a lot lower, and then another person that says, no, actually the good kind were still higher than they don't figure, or at least they don't pencil. I mean, I would say, if you're using the index, that's going to be another $3.50 down today. We're going to be a feeder index of 343.70 or something like that. One of the things about the index, remember, is this is like an 800-pound steer, right? Give or take. The North has very few of those in the mix right now because the yearling run's done. Now we're selling calves. I would say that the calf market's lower now on these big strings of the good kind, the ones that have had shots, the kind you want to buy. They're not a lot cheaper yet, maybe a little bit, but from a just from a math standpoint, there's something called the cattle crush, which takes the value of feeder cattle against when the cattle are going to be fat of live cattle, the value, and then the price of feed. You still have that where either the fats are too low or the feeders are too high. I think most people tend to think, well, maybe it's the feeder cattle that need to adjust a little bit. So I'd have a little more, particularly with this whole uncertainty about the Mexican border out there. I would say that the feeder cattle market may be a little more vulnerable for a minute.
Let's talk about technicals. Lower weekly closes, lower monthly closes in many of the fat and feeder cattle futures. And then we've got these bear flag formations that are being talked about in at least December live cattle and Jan feeders. What are you seeing? Is it really that vulnerable technically?
Well, when you remind everyone that it's the funds and the algos and those technically oriented trading entities that have a lot to do with our market, of course it's important. I think we've got, imagine a flag upside down. Okay, that's what both the feeders and the fats had. We went straight down, as we reacted to the rhetoric out of Washington. Now we've chopped sideways for a week or more, unable to go back up and, like, for instance, fill the gaps that we left on both the feeders and the fats. We got the first one on the feeder. There's 3 more above us yet. Even a 38% retracement of the break on the January feeders is like $8 away and partway into the gap. And yet we haven't been able to really make a run at it. To put it in real simple terms, so you break $60 on the feeder cattle. We did, and we can't seem to muster more than a little bit of this rally. It feels a little bit like we're not performing great. So not always, but what usually happens on a flag formation, you break out in the distance of the staff or whatever. So, I mean, in this case, that's lower. So you go sideways and we break out and then have another leg lower. So yeah, technically that's what I worry about. I look at the calendar, I go like, it wouldn't be the first time the market sells off between now and Thanksgiving. And with all the other stuff out there, the uncertainty stuff, I remain cautious. I have a great amount of enthusiasm for the first quarter, assuming that we have got some of this news behind us and the market's been able to assimilate it and get used to it. But in the here and now, I think the market stands reason to me to be a little bit careful.
I think we should also emphasize that during this correction, box beef has actually gone up, hasn't it?
Yeah, I know. There's so many things that one could say, and I think most everybody's been hearing it already. Let the market do its job. Let the market do its job. And the whole notion that it's the rancher's fault that hamburger's too high. I mean, come on. Costco doesn't call me and ask me what we should charge for ribeyes. Give me a break. This lack of understanding how the whole system works. Yeah, box is actually a little bit higher than when all this fiasco started. So I think that's got a lot more to do with the price of beef at a retail level than anything else. Anyway, I think most people would share my frustration with the chatter and the worry, though. Okay, what's next? I watched 60 Minutes last night. It was mentioned again by President Trump that we're going to get the beef down. Yeah, we're working on that. And knowing just the nature of that, what does that exactly mean? I mean, are we going to keep trying stuff till it does go down? That worries me a little bit. You know what I mean? Whether that's an unfinished agenda that is still, they're still coming up with different ideas and how that's got to work.
I think that's a little ignorance to think that you can take care of this like you did the egg problem by just increasing imports. This industry is way different than that. So that's what I'm going to chalk it up to.
Yeah, it's a 30-month fix. It's not like eggs where they're 9 weeks or something like that. You got more of them. I mean, or grain for that matter. It's a 1 year, 1 season. Next year you raise a big crop. This just takes a long time to rebuild a herd.
Yeah, but in the meantime, producers are pretty mad about the president getting involved in the beef business for sure.
Me
okay,
too.
So let's talk about the hog market. We're hovering at $80 on the December, which I don't know if that's even going to hold here. What is wrong? Is it just that the cash market continues to pull this market down, or what? Because we got news that China's going to pull off their retaliatory tariffs on U.S. pork, and that didn't even pump the market up.
Yeah, this hog thing's a struggle, Michelle. I mean, you outlined some of the issues there. I guess I'd start by saying with the kind of supply that we're producing here, you need perfect demand to sustain some kind of rally. We don't have perfect demand because our export demand isn't there. I know I've said on your program that, reading the tea leaves here, this easing of the tensions with China should have been bullish hogs. I was worried all along here that China they got the 20-story buildings that they're raising hogs in now, that they've got their hog industry back on its feet, that they're through their big problem when they had with disease and this big shortfall and shortage in numbers when they were forced to import pork from us. It feels like their industry must be thriving right now. So that's negative hogs. Probably bullish feedstuffs, corn and beans, right? That week, because they have to buy some feed somewhere. But no, the action here on the hogs the last while has been terrible. Average weights are way over a year ago, 6 pounds almost, I understand. So it doesn't feel like we're very current on top of it all. So with a shaky demand thing, I don't know, at some point, if you're somebody that's rooting for a recession, which I don't know that anybody is, but, maybe you could get a little boost in domestic demand. Obviously, the price of pork compared to beef is way out of line, but it's been that way for years. So I don't know. I don't have much to pin your hopes on. And the only thing you can say good about a market that it's severely oversold, you don't have a lot of good things to say about it.
For sure. All right, soybeans up, making new highs for the move again this morning, and we had a higher monthly close there. We got clarification that we're going to pump these 12 million metric tons of soybeans that China's going to buy out for the next 2 months. How much higher are soybeans going to go here, do you think? And why isn't corn following this morning?
Well, the beans have got a better story now that we've, put some confidence back in here that we're going to balance up this supply-demand table. We are going to get, this export plugged in here like we've been missing all season. So, if you look at the supply demand situation compared to the corn, you asked about the corn, the beans have a better story. I could make a case that given the kind of carry out that it would be projected, assuming that this all happens with China, which of course is a big assumption because they're not the most trustworthy trade partner. Okay. But I mean, if it falls like it looks like, you could easily have a bean market, in my opinion, another 50 cents higher than this, and then fall within the normal parameters of, well, that's what we usually do when we've got this kind of a carry out. So I'd say, there's some room left here. Obviously the Brazil thing, they're going to plan a record, I'm sure, because they're going to be incentivized now, and you're going to hear some of that bad news coming to the market. The corn thing, there's some spots, and I'm sitting in one of them where, other than there's been some wind damage, but we're sitting on a monster crop in a lot of places in this part of the Corn Belt, running out of places to store it, things like that. Basis is a little softer. I do think that the corn's got a little bit upside potential, but it's probably, thankfully, getting drug along by some of the other stuff. It's not going to run away. It may not be that big record, but it's still pretty good. Yeah.
So a little hedge pressure maybe here, but also we're up into some pretty stiff chart resistance in corn now, aren't we?
100%. Yeah, we got work here all the way from here to 450 on the front months. And I was hoping maybe we could get to that 450 level, which is another big, 20 cents away almost. But I'm not sure that I would wait for all of that. But it's grinding along. You got an inverted head and shoulders bottom. We're still, we made new highs for the move last week. So maybe not, just don't quite give up on it yet. But it certainly doesn't have the speed that the beans do.
All right, thanks so much. That is Brad Kooima, Varilek. That is Markets.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.